When we set up GFTN last year, the view was that we had already a well-established ecosystem that had been set up since 2016, the first FinTech Festival, and as you know, that has grown in size significantly with now 65, 70,000 people. Many entrepreneurs who have grown with SFF have grown with what is now GFTN and its predecessors, Elawandi. And so the relationships with founders is very deep. Many founders want to do more with GFTN. And one of the items that was missing is having GFTN Capital, where we are able to work with founders in helping them grow their businesses. The benefit for them is having an institution like GFTN with its deep ecosystem as well as its network, helping them expand, navigate new regulatory environments, new jurisdictions, as well as help with broader global strategy with the, if I may say, the firepower that already exists within GFTN. So we started thinking about what do we do with that opportunity, and quite frankly, the desire of many fintechs to be, fintech founders to be even more closely associated with GFTN. The view was they wanted us on the capital stack. So how do we make that happen? So we decided to set up a separate capital management business. And it's important to set up a capital management business that is separate simply because it's regulated differently than other entities within GFTN. So that was the basic premise, that we had an ecosystem that was very keen to engage further, needed development capital, and we wanted to facilitate that by setting up by formalizing the arrangement through GFTN Capital. Often capital formation or capital groups are set up and then the ecosystem is built. Here we have the ecosystem already built, but we didn't have a capital environment. So many groups reached out to us. SBI to us was perhaps the furthest along and most aligned with what we wanted to do, which is provide growth capital to fintechs who clearly have a very clear idea of what they want to be as they go forward. So what is the fund going to focus on? The fund is going to focus at the growth stage. So not at the startup stage, but at the growth stage of investments. I don't want to get into series A, B, C because different jurisdictions have different definitions of growth. But the fact is this is not startup and nor is it PE. It's somewhere in between. And the focus is to help these companies grow, these fintechs grow, and really maximize their potential. SBI shared that philosophy with us. They have a wonderful track record of making that happen through many of their funds. As you know, they manage billions of dollars of capital. Many of it that has been raised from very high quality limited partners globally. So we have decided to go forward with that. Now, is it the first of many? We certainly hope so. But I've always believed learn to walk before you run. So I'm not going to make any promises, but the view is this is the first of many, but we got to get the first one right. What is first one right getting? Getting the right type of investors, getting the right type of investments, even more importantly, generating the right kind of returns for our limited partners, so that when we have future funds, they are all very keen to participate in future funds. One of the areas that we have found very interesting has been on the cyber side. I think there is a lot of progress that A, needs to be done, and B, is being done as we speak. I think the overlay of AI is going to change the dimension for many of these fintechs. And many of the fintechs have embraced AI left, right, and center, and really devise new strategies with the ability to work with AI. The basic premise, the basic model remains the same, but how do you get to your goal has clearly been, if I may say, turbocharged with the advent of AI. But I'm not going to pick one sector over the other. I've already mentioned I'm personally very bullish on cyber simply because there's a huge demand. And I think we are probably, if I may use the baseball analogy, in the second innings of a 9-inning game here. So we have a long way to go here. The others also, The payment side is more developed, but I think that's also changing with AI. You look at the wealth management side, there's a lot to do in fintech in that too. So I'm not going to pick specific subsectors. All I'll say to you is there's so much to do that it'll be a opportunity and an issue for the investment management team to select the best opportunities to invest in. The goal is to be absolutely global. Now, if you look at the partnership between SBI and GFTN, our core strength is the Asia Pacific region. I would include India and GCC in that. I would say that would be the core market, but we are not restricted from going beyond this market out of the box. So, for example, if you see a wonderful investment opportunity that happens to be outside what I just defined as the core region, we wanted to make sure that the partnership will be allowed to invest in that opportunity, because coming from the investment business myself, sometimes the best opportunities come from somewhat surprising sources, and one must be, while being focused, one should be nimble enough to be accepting of those opportunities when they come. So two things. We have also signed a MOU with Axiom, and that fund, when it is established, right now it's just a strategic partnership. Axiom, as you may know, is one of the leaders in inclusive finance, and that fund will be focused even more so on impact investments. And how will we measure impact? I think that's Axiom has got it down to a science now. So we're going to follow the rules that have already been established, which are well established at this point of time. So I think our goal is clearly to be front and center of investments that make substantial impact. It's an equal partnership, and in everything we're going to be partners, from sourcing deals, from evaluating deals, from portfolio management, and on the investor side, raising money for the fund. We have our relationships, many of whom have already reached out to us wanting to be part of this new fund. SBI, of course, has raised billions from limited partners in the market. They have their own relationships, they have their own balance sheet. So we're going to work together to optimize the fundraise as well as the investments. But this is an equal partnership. I can't predict regulation, to be frank with you, but I've always seen Singapore as being very proactive. We don't have to be the most adventurous, but we are rock solid. So we don't flip around, we are stable. What we do, we stick with. And I compliment the Monetary Authority of Singapore for really setting up a regime which is respectable, which is forward-looking, but at the same time seen as being stable. So they are, if I may use the phrase, there are very few flip-flops that happen. And when you're looking at making regulation, I think that's a major benefit, having been an industry participant, where you have the advantage of a real stable regulator. Now, how will other jurisdictions, and I follow some of them, grow? We have seen some radical changes, as we have seen in the West, especially in the US, in the last 12 months. Some of the other countries are following that. Others are perhaps looking to see how things fall there. I think it's too early to say who is going to be where in 3 years. But at GFTN, and certainly GFTN Capital and the partnership that we have, is going to be very focused and going to be very nimble. Obviously, with a network that we bring, keeping in mind that, we have some of the best relationships with the regulators around the world, financial regulators around the world. I think we should be at the forefront of identifying new opportunities. First and foremost, we are focused on growth capital. Why did we focus on growth capital? Is we heard from innumerable founders that there was no dearth of startup capital and there was no dearth of private equity capital. The gap was in the middle. So the first message is we are hearing what you said to us. We have heard what you have said to us. We have focused on the gaps in the market. We want to help bring capital to the segment where the founders need it most. That's message number one. Message number two is we have a very good sense of how founders are performing. Many of the founders started off with ideas from the FinTech Festival of 2016, 17, 18, 19. Many of them we know well. We would love to work with many of them as they grow their businesses and fulfill their promises and their goals. Third, we want to be long-term partners. And that is very important in this business, is not look at short-term investments, but look at long-term partnerships. And that's what we are looking at right now. If you have a good vision of where a business can grow, I think valuation follows. Because sometimes what may seem really cheap or valuations have dropped from 2021 can be a double-edged sword. There can be a value trap. You may be catching a falling knife. On the flip side, what may seem exceedingly expensive, maybe perhaps is some of the investors don't get the big picture. So we feel that we have the maturity and the knowledge of the various sectors and subsectors in what we are focusing on, where we should be able to identify the long-term winners. Again, there'll always be vicissitudes of valuations. That's life. But the reality is, if you're looking at it long term, then one must have conviction. And conviction is based on knowledge and experience and relationships. And we feel that we have the right knowledge, the right relationships, the right conviction. And we are humble enough to always be listening to people rather than assume that we know everything.